Hi, are you a working professional looking to accelerate your journey to financial freedom? Welcome to this presentation by SmartWealth.ai. In this, we are going to discuss our product portfolios that will help you accelerate your journey to financial freedom. When I was in my mid 30s as a working professional, I was looking for accelerating my journey to financial independence, and I saw only fragmented solutions around, which were very high risk, poorly diversified, and were missing out on alpha. There were solutions that would give you sporadic wins, but they did not have diversification. Those that had diversification did not have asset class balance to tide over multiple market regimes. Those that had asset class balance simply did not have enough alpha to accelerate the journey. And I felt that solutions were actually bits and pieces of the overall puzzle, not exactly a solution for the entire puzzle of accelerated financial independence. That is why I decided to solve this puzzle myself. And we solved this puzzle using our framework called diversified momentum investing. This essentially has 5 levels of diversification for serving 4 types of investor personas using 3 strategy pillars. If you want to see more about our genesis, about our journey and genesis of diversified momentum investing, do check out our main video on the home page. But for now, let's get started with diversified momentum investing, which has 5 levels of diversification for investor personas using 3 strategy pillars. These are those 3 strategy pillars. One, stocks portfolio as a pillar, assets portfolio as a pillar is 2, then 3, factors portfolio as a pillar, and then combination of these. We have 2 types of strategy combinations. We have 2-in-1 strategy combinations that combine stock portfolios with asset portfolio. We have 3-in-1 combination which combines stock portfolio with asset portfolio and factor portfolio. These combinations are built dynamically using Markowitz efficient frontier principle so that you can continue to beat market in a robust and high liquidity manner. There are 2 plans available, 50 lakh plan and 75 lakh plan. Let's look at these 2 portfolios side by side and compare. But before that, let's just see how endurance 2-in-1 portfolio will respond to market regime changes. When the market is bullish, you may see most of the allocation is made towards stocks portfolio and small amount towards assets portfolio. When the market is sideways, it may increase the allocation to assets portfolio and decrease to stocks portfolio. When the market turns bearish, it may make most of the allocation towards assets portfolio and very small allocation to stocks portfolio. And by way of making allocation changes dynamically, it has the ability to respond to the market regime changes and thereby achieving high risk adjusted return over several market cycles. The 3-in-1 portfolio, which is Triumph multi-strategy portfolio, has ability to respond to market regime changes. When the market is bearish, when the market is bullish, most of the allocation may be towards stocks portfolio and very small minimum amount towards factors and assets portfolio. When the market turns sideways, it would reduce the allocation to stocks and may allocate little more to assets or factors. When the market turns bearish, it will reduce the stock allocation to the bare minimum and might increase factors and assets. Thereby, it has ability to respond to market regime changes, delivering higher risk-adjusted return in a low volatility manner. A side-by-side comparison of Endurance paired strategy portfolio and Triumph multi-strategy portfolio is here. Endurance is essentially a dual engine diversification, which is 2-in-1 combination. Triumph is a 3-in-1 combination. So Endurance combines stocks and assets. Triumph combines stocks, assets, and factors. Both of them add diversification. Both of them enhance stability and liquidity. Both of them use mean variance algorithm, which is Markowitz efficient frontier principle, and the allocation to individual strategies is limited to 75%. So by way of limiting this, mandatorily 25% diversification is ensured at all point in time. It may go higher than that, but never below 25%. Both of them are reviewed weekly on Thursdays. The right time to schedule your SIPs is the first week of every month, the first Thursday of every month after executing your rebalance. Endurance portfolio allows you to invest up to 50 lakhs, whereas Triumph portfolio allows you to invest up to 75 lakhs. By way of combining multiple portfolios, we also enhance liquidity so that larger capital can grow at a faster manner in a low risk, high return manner. On our website, you will see a lot more detail about our products. You will also see very informative blogs, FAQs, and testimonials. If you have any questions, do not hesitate to reach out to us. Our contact details are here. Thank you for watching, and we hope to see you soon.